Hello, welcome to another video by Indicator Vault. This is Ronald, and in this video I'm going to go over some confluences that can be used when pairing the order block gen and the divergence dashboard together. We can see, this is the dashboard here. It comes in two parts. I've just got the time frame part here on the chart, but it does come in a multi-symbol dashboard as well. And this is what I wanted to point out, this price action that you can join together with these to find some high probability zones to trade from. And if I first hide the order block gen, you can see here the divergence dashboard picks up some bearish divergence here. So typically with divergence, what it's telling us is that this high should not get violated. It should be respected, at least relative to the next down move. Obviously, in terms of a bearish divergence, that's the case. And you can just flip it for a bullish one. It's telling us that this high is really just a fake out and that it's actually wanting to go down. And of course, we can see easily takes out this low, then kind of creates these other lows and then takes it out, then another dip down before it starts to go up. But when you see divergence, many times you're going to find high probability zones that form, and that's where I want to bring in the order block gen. When you see, again, take note of these two candles here as I then hide the divergence. It has a bearish order block inside, right where the divergence has formed. And so we see these two zones overlapping with these two indicators right here. So if we stretch that out in time, let me mark the low of just the order block with the high here. You see it pokes into it, kind of, consolidates for a little bit, for a few hours, but we can see this high never gets violated. And what does it then do? Takes out this low, takes out this low, of course, big wick down into this bullish order block, but can't break above that high, comes back down, doesn't quite break it, but you go into a lower time frame like a 15-minute, 5-minute, you're going to see lots of trade setups in here. The principle, the theory, the price action that goes on when you see these two overlapping is going to create strong pushes down. And of course, we can see it even dip back into this zone just today and has offered, another great push down. Not quite taking out these lows yet, but I just wanted to point out this confluence is going to be very powerful, and we're going to pull up another chart and dive into a lower time frame. And now you can see here I've got the Australian dollar 3-hour chart, and I'm going to go into some more examples on this pair, but as we can see here, this isn't exactly like what I just pointed out, but in a sense, the theory still stays the same. We see bullish divergence. Now, we don't see an order block form within here. Divergence does happen, but it's a little messy price action. These two candles, you don't quite see this price action happen very often. It's a little messy, but what do we see here then? Price retraces down, forms a bullish order block. So what can we expect? We can probably expect this order block to hold, which we can see it does. It dips down into it and very strong move up. And so the theory, the concept still, plays out here where this low is not violated. And then even the order block, even though it didn't quite, form here, it forms in the same, close to this low, and even the low of this order block does not get violated. We only see this one wick down into it and then flies up, quickly creating just a new higher high here. Retracement again, goes back up. But let me jump into a more recent example here. You can see I've got the natural momentum indicator, and I'm going to bring that up in a little bit when we go into a lower time frame. So we can see here this divergence plays out. We've got bearish divergence here. But even with a strong break of structure here, it then takes out this high right here with this candle. And that just happens sometimes. Price will do what it wants. It doesn't always have to perfectly respect things like divergence. That's why we go with highest probability trades. And that's why I am bringing in this example with these two indicators, because as I hide that, we don't see a bearish order block form with this bearish divergence. See how it marks it out here, but no order block has been validated by the indicator. But with this next one, we do. Bearish order block inside from here to here, it's picked up new divergence. Okay? See a strong break of structure, chops around some, retraces, and look at that. Just pokes right into the order block. Let me hide the divergence. This is the low of the order block, pokes into it, and today already has already created a new low. But let me go into a 15-minute, and even I'll bring in the natural momentum indicator. All right, so here we are on the 15-minute time frame on the Australian dollar. Remember, this yellow line here was marking the low of the bearish order block, and that bearish order block was inside of the bearish divergence. So price moves away, retraces, perfectly touches it, and we can just repeat that process as far as the order block is concerned. We see price break below it, retraces back into it, and then continues to fall strongly. And now this is where I wanted to bring in the natural momentum indicator. So bring it up some. Strong bullish move to the upside. And yes, that does indicate bullish momentum. However, it's now hit a price point we can expect some bearishness from, right? The higher time frame is telling us with the bearish divergence and order block over here at our left, indicated by the yellow line, that we should see price move away. Now, when we see this looks now that it's now overextended with this strong push up right here over the last hour or two. It's overextended, and so to me it's indicating that it's more kind of burnt out on moving up for now. And then when you couple that with the logic that it's reached the higher time frame bearish zone and specific price level with the low of the order block, you can expect a down move. You can start looking for sales. If it, for instance, was maybe right here at the zero line, well, then maybe we need some more confluences, some other confirmations, to get in on a trade, or really we just sit on our hands. But with this kind of telling me it's overextended, of all this price action here over the course of these couple days, this is by far the highest it is on the blue zone. And then right as it hits the order block, we can see the green line has now turned red or orange, however you want to call it, telling us that, yes, it is cooling down. It is overextended. The blue zone with the green line indicating upwards momentum, the momentum is now stopped. So you could either enter here with your stop above the higher time frame zone, or if you wanted to just wait for the lower time frame confirmation, like I said, a break below the order block, retrace into, a smaller time frame one. Let's just say you got in here just above this high as it takes this high with your stop above here. The R&R just to create a new low would be tremendous. And as I get that up here, I want to show what the R&R could be. For me, you could frame it on the higher time frame. A little bit too big of a stop for me as far as where the high was. And so some of that is, while you want to maybe frame off of lower time frames, is to have better risk to reward ratios where you can find the lower time frame highs or lows that will hold. So that's one reason why I'm going to use this high. Again, all the confluence in the world telling us this high should hold, especially when we see this break of structure here. Have it maybe right on the low of that supply zone. Stop above that high by a few pips to account for some spread. And if we're expecting a lower low, we can see it eventually does take it out today. Of course, you got to weather all of this move. This would certainly scare some traders out, this strong move, but we can expect retracements, right? That's just part of price action, just normal price action. So for this, just to create a new lower low, you're looking at almost a 6R, 5.93, just to create a new lower low. We can see it has, gone a little bit below that. But you can take partials and write it out and, see if it continues its bearish momentum. So I hope that that this video was helpful. This is, the order block gen and the Divergence Dashboard with Indicator Vault, and just some ways you could use them as, dual confirmations to get into some trades. And until next time, best of luck trading.